everyone says, you think about VC as something special. It's not. It's just money, right? And more people are willing to play in the money game.
Now, if you think about, like, in some ways, the whole model of Tiger was they're investing in this kind of later stage in the VC ecosystem. Their whole thing was, okay, we can do these deals much more efficiently. They publicly stated that their hurdle, like their IRR hurdle, was much lower than a typical VC. They're trying to get, let's say, 12 to 15%. Maybe typical VC is shooting for 20, 25% kind of thing. Now, of course, the interest rates were much lower back then, so the diff on the interest was still decent. Like, how do you think that kind of like, why do you think that happened, and how do you think that starts to play out in the future?
Well, look, I think why it happened is because the dollars were there. Like, again, venture capitalists just respond to incentives, right? And the reality is, especially in the zero interest world, you had a bunch of big LPs, and they said, hey, we need places to put money. You got any places we can put money, right? And one of the great ideas that came out of that was, oh, well, these companies that otherwise would have gone public, let's just keep them private. Like, you can tell them, go to the company and say, hey, don't worry about going public. Don't worry about the public markets, especially good ones. Like, we'll just keep giving you money. We'll make it super easy. We'll make it better terms. We'll make it efficient. You can keep control. Like, so you end up with this weird thing where the private market started competing with what historically was the public market. And then even worse, if we're talking about this in the deck, what played out is there's this crazy adverse selection problem where, like, if you're a good company and all of a sudden all the private market investors have tons of money, they're like, well, I'll just buy more Stripe. Like, don't go public Stripe. I'll just buy more, right? Like, whereas the companies that actually went public were like the shittiest companies, right? And so you ended up with this problem, which is also compounds this whole end of the factory model thing, which is not only that the public market lost its appetite for some of these types of deals that kind of shut down the factory line, but actually the things that did go public through SPACs, through all this stuff, were like literally the trashiest companies. And so all of a sudden the public market's like, I don't want more of your tech trash, right? And, I have my hashtag blame Chamath for this, which is only half joking, right? But I think what ended up happening, how this all came together really was like this problem where the Tigers, as an example, but there are many firms that did this, said, look, we can get so big with cheap money that we actually can be an alternative to the public market for companies that otherwise would have been public, right?
Now, in 2021, I think we saw like 70-ish, tech companies go public, and I think all of them except for maybe one are down from their public mark. Now, that's just because, like, in general, everything is down from the 2021 kind of marks that are out there. Some of these companies are actually still very good companies, but like, I mean, going public kind of sucks, right? Like, I mean, there's this trope in venture capital, oh, go public, it's good for you, but like being a public company is terrible. Just like there's probably like a $2 to $3 million a year in costs. It's just like you go and then you get sued all the time from public shareholders.
Well, that's like from Tech 1.0. It's like, thank you, Sarbanes-Oxley, right?
Yeah,
like,
it's absolutely horrible. Like, I don't know why anyone would want to go public. Like, there's a small number of reasons to go public, but there's also a ton of reasons why you just want to, like, I don't see going public earlier happening, like, in the future. If you can get access to private money, like, why not wait?
I don't know. I mean, I think, like, it depends who you ask. Like, Reed Hastings will give you this like long speech about how it's really good to go public early and just rip the Band-Aid off, and how all this stuff about the public market sucking, it's not right because you just need to find the shareholders that are fundamentally aligned with you and the rigor is good. Fine. I think the reality is that, post Sarbanes-Oxley and a bunch of the controls, it's like super expensive to be a public company. Like, you have to be really big to justify it, right, from a cost perspective. The volatility sucks. Like, there's all these problems with it. But look, I mean, there's this spectrum of everything from, this is a company I own 100% of, right? And it's just like, and it could be, especially in 2023, you can have very large companies that are wholly owned, right, that grow up cash flow and do great, all the way through to, like, I have a bajillion shareholders, to everything in between. And, people will choose different points on that curve. But it is, I mean, I think it's a tough thing. I mean, there's no question that in general, the public markets do face an adverse selection problem because, to your point, Auren, it's like the high quality companies, there are plenty of very rich funds, LPs, et cetera, that are happy to say, no, we're happy to hold your stock, right? And even, I mean, there's a whole history, I think I talk about this in the deck, that's what happened in buyout coming to VC, right? So if you think about how buyout used to work, right? it always used to be oriented towards the public market. You bought a company from the public market, you took it private, you know did the blue horseshoe loves Anacott steel thing, stripped it up, fixed it up, whatever you're going to do, and then you put it back public, right? And like that was the whole point. That game has completely evolved, and now private equity funds just sell to each other, right, in the same model, which is like, that used to be a crazy idea. Like no one would do that. I suspect that will come to VC as well, right? And we're going to end up with a very heterogeneous capital structure in terms of who owns what assets.
Now, a lot of companies out there that were funded weren't like really tech companies. I mean, you pointed out things like, DDC companies, telemedicine, on-demand services. They were kind of like sold as tech, but they weren't really tech. Like, how do you think about like what is tech and what shouldn't be tech?
Yeah, I mean, like, look, I think this is no question. Like, tech is a story, right?
Yeah.
Anything else. And in a world where tech is the hot thing people want to buy, everything gets packaged as a tech company, right? And the reality is in 2023, it's pretty shocking to think of a company that wouldn't use some technology, right? In terms of like,
exactly. Like who doesn't use most of these tools that are out there?
It's like everything, so I think, I think it's just a question of understanding ultimately profitability profiles, like what this thing really is, like where the leverage is. Is the leverage in tech? Is the leverage in something else?
Yeah.
There are things in our portfolio that honestly, if you look at them, we've funded and they don't look at first blush like a tech company. Like I'll give you an example. One of my favorite companies we funded is a company called Team Shares, right? And what Team Shares does is it buys tiny businesses at like a few times cash flow and like does a mini Berkshire Hathaway, or a great company that is kind of an analogy to this. Well, I'll stick with this. So like imagine mini Berkshire Hathaway.
Yeah.
And you're like, that's not a tech company. And you're like, yeah, you're right. Like,
sounds like a private equity firm.
It's a private but there's actually a hell of a lot of tech involved, right? Because one, they're running screens to figure out which companies they can buy, the ability to manage tons and tons and tons of few $1 million businesses at scale without like a huge amount of overhead, is very tech enabled. Now, look, can we argue, is this a tech company? Is it not a tech company? We can argue about it. I'm also sure it doesn't even really matter. Right?
Yeah, it doesn't matter.
Degree.
Right. Like, if you can make a return, it could be a good investment. Now, there are some of these companies. I mean, we saw some big failures recently, like Convoy, which was an on-demand platform for trucking. But like, to me, these ideas aren't like, they're not necessarily terrible. Like and some of these, you might need a ton of capital. You might need hundreds of millions of dollars at least to get like to the network effect. Like, how do you think about these types of businesses that are out there?
Look, I think that we live in I think another good example is places you need tons of capital is obviously like AI, right? Like, if you're doing base models and things like that. And look, here's I think the reality of the world we live in. If you need an unbelievable amount of money, venture capitalists don't have it, right? You got to look at like the top biggest tech companies in the world, which is why, again, I think honestly, like the reality is the biggest tech companies in the world, the ones that are going to dominate AI, it's perfect for them, right? Enormous capital requirements, distribution, data, like
right. And they literally have, like, in some cases, they may have like $100 billion on the balance sheet that's just like in T-bills.
Right. And so it's like they can just swamp. If you need like an enormous amount of capital, they're going to swamp it. Then there's I need $5 million to prove something out, right? Or I like have a good business idea, right? That's going to be super high leverage and and I'm a great operator. Look, the interesting thing about that is actually that's great. A lot of people have $5 million, right? And so the reality is the good news is there's tons of great businesses to build. They're a great place to be an operator, right? If you have low capital requirements to figure out. The bad news is that dollars aren't that valuable, right, at that scale because everyone has them, right? It's just an efficient-ish market, unless you're going to do something weird, which is kind of what I like to do, which is weird stuff, right? You have to find things people don't think are good businesses that actually are. Then there's like the medium amount of money, right, which is like tens or hundreds of millions of dollars. All of a sudden, like you find venture capitalists who say they're in the innovation game, but they're really in the asset management game. Like, I just think a lot of that's going to get washed out, right? Because the biggest opportunities that require tons of capital will go to the truly huge platforms, right? Just to the point is like, everyone says, you think about VC as something special. It's not. It's just money, right? And more people are willing to play in the money game, right? So I think there's like a whole set of really interesting outcomes from this. But I think per usual in life, I think the really big guys are fine. I think the really small guys are fine, but it'll be competitive. And the middle drops out because the middle always drops out.